Hi friends, am I audible? So we have only two participants so far. I'm not sure whether being Sunday today people will be available or not. Okay, we will just wait for like 2 more minutes, so then we'll jump start with the session. Even I'm not sure whether being Sunday people will join or not. So we have like very less audience today. So is my audio audible, friends? So I think today's session is going to be like very interesting. So when I say interesting in terms of how to deploy the trades, so basically what trades we need to deploy based on many other factors. So let's wait for another 2 minutes, 1 or 2 minutes, and then we will start with this session. All right. So before that, can you guys please confirm me whether my audio is clear? All right. Thank you. Okay, so I think it's already 7:02. So maybe just in case if people are not able to attend this session, so they will be watching the recorded session. So okay, so good evening all. So let's start with the session. So today's session is going to be like what are all the potential option strategies for 22nd September expiry week. I think we have done already one more session last Sunday. I believe I've shown you like what all strategies we can deploy for the next week expiry. So today we will discuss about the 22nd week expiry. Alright, so let me take you to the next screen. The bare minimum thing for deciding like which trade we will be deploying. So these are the bare minimum things which one should have. At least for me, this is a bare minimum thing. Direction of the market. Okay, so I'll use chart as 80%. So my view of the market or direction of the market comes from the chart. Okay, that's where I've just quoted it as 80%. And then the remaining would be like open interest and what are the FIIs doing. So that will be like 20%. I would rather say 90% is my chart analysis based on the chart, and 10 to 20% on the open interest and FIIs. You know that open interest keeps changing daily. We all know that open interest keeps changing daily. That's the reason, because chart analysis, at least from the long perspective, right, on the 1 day time frame or 1 hour time frame, right, that doesn't change, but open interest and FIIs keeps changing. Okay, these are the two parameters. I would say chart, open interest and FIIs, and then I use SGX Nifty just to see whether it is a gap up or gap down. If you remember, every day morning at 8:45 or 8:30, I share you the SGX Nifty. I'll show you again today also. So wherein I'll just get a clarity saying that okay, today is going to be a gap up, gap down, or it is a flat open market. And then I've just put something like crossover on the prediction. So friends, try to see the takeaway from this session. One of the takeaway from this session would be like, do not predict the market. Now you might be in confused status, like this guy is telling that direction and view of the market is must, and also again is telling that do not predict. See, those are two different things. Prediction is totally wrong in market. I'll give you an example. When the Google CEO doesn't know what is share price will be after a microsecond, forget about second, after the next microseconds, when he is not able to predict, how can we predict? You got my point, right? So rather than that, you need to have the direction and view of the market. When I say direction view, that is the probability. That's it. We are not predicting actually. So that view, the direction comes from your chart analysis, from your OI and FIS, which will give you a high probability, saying that even that might go wrong. See, when I say direction of the view, that might go wrong, but that would certainly help you in terms of doing the adjustments. That's it. Your view can go wrong. When I say direction and view of the market, that's only your own view. Okay. So okay, we have 23 participants, and then okay, let me move to the next screen. Okay, so now, okay, before we jump onto the screen, right? So first I will take you to, let's see what does the chart says, what does the open interest and FIS say, right? Okay, let me take you to Sensible. Okay, first we'll see what is the open interest very quickly. We'll not spend much time. Okay, what is open interest for the next week? Okay, for the 22nd expiry. Okay, for the 22nd expiry, how does the open interest look? So first we look at the Nifty. Okay, so this is your intraday. Whenever you go to the Sensible tool, so this open interest, this first box is your intraday. So intraday, definitely on Friday, this is a Friday data. On Friday there were like 65.2 million call sold positions compared to 21. So definitely that was a negative day, right? So Nifty has fallen down, right? We all know. But this is the historical. Historical in the sense, what is, so this will act as a 22nd September expiry, right? How many, see if you look at this thing, total calls is 137.4 and puts are 88.9. So this clearly shows that maybe this September 22nd expiry, market can be sideways to bearish because there are like many call here, 137 versus 88, which is almost like 60% more than your puts. Right, this will give, this is a data that's it might be right, wrong, tomorrow this will change, but at least for tomorrow we can consider that okay, market is going to be like bearish, not bullish for sure. Sorry to say that for sure, at least the probability is like market will be bearish. Okay, now let me take you to this thing, Bank Nifty. Okay, this is the Friday data, this was the Friday data. Okay, this is Friday data. We add 12.5 million call puts, call positions, and then 6.3 million. Looking at the Friday data, we can clearly say that Bank Nifty might be bearish. That's what, right? If you look at the Bank Nifty here, right? Nifty was bearish for almost like 1.9%, and Bank Nifty was also bearish for 1.05%. But we see more of almost like 2% was down Nifty. That's the reason you see when I go back to Nifty, right? When I go back to Nifty, see the puts here, see the call and put on the intraday, right? 65, this is Nifty, yeah, 65 versus 21, right? 65 versus 21, right? Now I'll take you to the Bank Nifty. So Bank Nifty, looking at the historical, see 32.2 million and 26. So there is not much deviation, but still Bank Nifty can be bearish. Point number one, sideways to bearish. Okay, now let me quickly take you to the FIS. This is very important. This is the way you have to do the analysis. Right? FIS is very important. If you look at the FIS page, right, this is the outstanding. So this is on the intraday basis. Okay, this particular section you have to watch it as a buying. So if you look at this 1.19 lakh of quantity, people went for bullish and 2.63. So this is bullish and this is bearish, right? So check the difference. Bearish looks more, 2.63 versus 1.19. So do not consider this thing. So you have to consider that market is going to be like bearish because we have 2.63 lakhs people went for buying the put. This is not the selling, this is buying put. When do we go for buying put? Whenever the market goes down or your view is like market will go down. So this you have to read, this FIS data you have to read in terms of buying. So there are like more put buy. So market can be bearish. Even look at these bars. The red one is put buy, the green one is call buy. So there is more of put buy. So market will remain bearish, right? This is the historical. Even if you look at this thing, 22,208 quantity call has been bought. But if you look at this, almost double of this has been bought, puts have been bought. So net market is going to be like bearish. So this is giving you the bearish signal. This is giving you the bearish signal, even this is giving the bearish signal, but there is a contra, right? FIS went long. This is what you call manipulation or you call anything, but FIS went long by 837.6 CR. Let's see what happens. Everything says bearish, just with the, even DIS went negative, but this is more pertaining to your stocks and this is for your index. Alright, so we have covered. Okay, we have covered what else? What did we cover here? Right, we have covered the chart. Let's see about. We have covered the open interest and the FIS. So overall, it looks bearish. Okay, let's see the SGX. Right, how does the SGX snap? So next time, what you have to do is like if you have the trading view, just click on this two column, right? So then in the first column, you can put your Nifty. and then second column you can put your SGX Nifty. So if you look at the Nifty and SGX Nifty as on date, you know, right, SGX Nifty runs like almost like 24/7, so there are like breaks like maybe 20 hours I believe. So now our Nifty closed, if I keep the cursor here, our Nifty closed at 17,530, right, 17,530 here, if you're able to see 17,530, but now SGX Nifty is trading at 17,606. Okay, so almost I would say SGX Nifty is 76 points positive. So let's say tomorrow if the same thing stands, so then you can say that okay, let's say tomorrow 9 a.m. the statistics remains the same thing. So this is trading at 17,000. See, check these two columns, this one closed and closed. Okay, so let's say tomorrow at 9 a.m. SGX Nifty stands at 17,600. You can say that okay, our Nifty closed at 17,530. SGX Nifty standing at 17,600. So what is the deviation? So SGX Nifty is almost like 76 points positive. So tomorrow we can have a mild gap up or a flat, or else maybe it will match up to 17,600, right? So we have discussed about. So I use basically the SGX Nifty only for the gap up and gap down. So now let's start about the chart. So there are like, see friends, stay with me. So we are going to discuss about all these strategies. This is going to be like very interesting video. Okay, so let me just show you what is the view of, how to get the direction or view of the market. So first let me take you to the Nifty. Okay, you can just go here and select single column. Alright, so let me quickly take a quick check. So are you guys with me so far? Are you able to understand? Can someone say quickly yes or no by the time I plot the trend lines on the chart? Okay, so there is echo, I'm not sure. Alright, so let me know if you feel like more of echo. Let me try to adjust the audio. So let's come back to the Nifty. So based the Nifty, so this is my price action friend. This is my price action, you know, right? I mean, we have discussed many a times. So this I have plotted on the 1 day time frame. Okay, so I'll take you to the 1 hour. Okay, so this is my Nifty view. Okay, so if you look at the Nifty view, okay, so until and unless, right, if you look at this is very important chart. Until and unless, see, Nifty stands here. So my view might be unless and until Nifty breaks this blue color trend line. Because if you look at this blue color, let me make this red, or let me make it black so that you'll get to know. Right? This is the way I do the analysis. Price action is must. So unless and until Nifty breaks this black line, for me Nifty is still a bullish stock. Right? For me Nifty is still a bullish stock unless and until Nifty breaks this trend line, like maybe like this. If it breaks and if it goes down, so for me Nifty has started its downtrend. But if Nifty takes a jump from here, or if it comes here and if it takes a jump, so for me Nifty is bullish. That's it. Because if you look at this is a rising wedge. This black color line is a rising wedge. See, the same thing took a support 1, support 2, almost support 3. See, resistance 1, resistance 1. See the rejections when I say, right, when I'm drawing this black color, check the rejections basically. Okay, so for me unless and until, okay, this black color line is broken, so my view on the Nifty is still bullish, because this is making higher lows and higher highs. See, higher lows, higher highs, higher low, higher high. So it can make a higher low and then it can make a higher high. Okay, quickly let me quickly take you to the bank Nifty. Then we will start off with the strategies. Okay, this is my view on the bank Nifty. Simple friends. See, this is my. So what I've done is like, one second. What I've done is like, see, I've just drawn, maybe for many of you guys this might look like a okay, let me delete this thing. Okay, simple. So there is a rejection 1, see, rejection 2, almost rejection 3, rejection 4, and even here rejection 1, see, 2, 3 and 4. So now this is the all-time high. So when I draw on this red color, right, so this is all-time. That's where the bank Nifty went up. The reason why it retraced from there is like, earlier we had a resistance. This is how the price action works. Okay, these are all, this is where I call them as rejections and everything. Okay, so now this is where the bank Nifty stands. So now we will just jump start with our main session. Okay, what strategies we can deploy. Okay, so now the interesting part. So far we have just done the pre-analysis. Okay, so now we are going to discuss about this thing. Okay, so now let's say if someone wants to deploy a trade, positional trade, we have something called directional trade and we have something called non-directional trade. That's it. We have only two types of trades. One is directional, the other one is non-directional. Okay, if you look at the directional, you have debit spread. We all know we have ratio spread. Butterfly can also be used as a directional trade. I've already made the video. Butterfly is not only for non-directional, we can use it as a directional. Jade lizard, I've already made a video. Jade lizard is nothing but a strangle for which you will add a wing. That's it. I've already made a video, I'm not going to discuss. You have calendars. Yes, calendars can also be used as a directional trade. Meaning, see, we have calendars here and also we have calendar on the non-directional. If I want to trade the calendar as non-directional, I'll just have a strangle with call and put and then I'll add the edges. That is my non-directional calendar. If I want to go for the calendar, if I'm bullish, I'll just play with put side, or if I'm bearish, I'll just play with the call side. Okay, so we have credit spreads also, which we can play it as directional and non-directional. We have back ratio spread. This is what I'm just exploring nowadays. And then even your naked buying and naked selling also comes under your directional. Right, the same thing. Non-directional, we all know straddle and strangle. That is the pure non-directional. The moment you add the wing for the straddle, that will become your iron fly. We all are aware of iron fly. The moment you add the wings for your strangle, that will become your iron condor. You can go for butterfly as a non-directional, calendar as a non-directional, credit spreads and naked buy. Okay, the reason why I've highlighted this VIX is this plays a very critical role in terms of deciding which trade you want to deploy. Today I will show you. If you ignore this VIX, you are doing something wrong, very big wrong. Honestly, if you ignore this VIX, see, I'm honestly telling for all the option sellers, this is God actually. If you understand the crux of the VIX, what is VIX and everything, right, you will get to know. See, I'll tell you one thing. Do we have any parameter which will tell you whether the VIX will go up or down? Can someone type me before? I mean, right? There will be a lag of 20 seconds. Can someone tell me how to know whether the VIX will go up or VIX can come down? Do we have any parameter as such? Alright, so let me. So the only way to know whether the VIX will go up or go down would be with your only defined events. So when I say defined events, during election, you can bet on VIX saying that VIX will increase because we are not certain about the government, what type of government will get. Maybe during the, budget, right, VIX tends to go up because, you know, right, every time when we have the budget, there is a fear. What is VIX? Basically fear. So during the defined events only you can identify VIX, right? See, I say not predicting, but at least you can get a view of the VIX saying that okay, VIX might go up during the elections. Every 4 year, 5 year we have the election. Every budget the VIX will go up. During some results, let's say SDFC has some results or TCS, all the heavyweight stocks will have the results, right? So if you have good results, the VIX will come down. If you have some bad results, VIX will go up because VIX is always correlated with your with your fear, right? So we do not. Okay, let me check. Did someone give? See, no one gave, right? So I asked you all the questions saying that can someone tell me any parameter or any way wherein we can know that VIX will go up or down? Okay, I'll tell you, we cannot. See, only one thing where we can know whether the VIX will go up or go down is purely your view of the market. Simple, friends, right? View of the market. So VIX is simple. If you have the view of the, let's say this is your resistance, right? If you feel like market can fall, so then you can say that VIX will go up. Right? 95% of 90 to 95% of the time. Other than your defined events, to know whether the VIX will go up or go down, that is only the market view. So let's say the market stands at your support. If market is supposed to go up, then your VIX will fall. That's it. This is the two things. So that's what I keep telling. Price action is very important. Unless and until you have the view of the market, don't even trade. So even if you do not know the price action, not asking you to just go to my price action series and watch. You get trained by any YouTuber, any of your friend, but unless and until you have the view, your own view of the market, don't even trade. Block your Zerodha account. First go master your price action. Right? Write these words on the bond paper, friends. You are not going to sustain in the market if you are not very good at price action. Mark these words. No, I mean you can just make the money, but that is like very short time. Maybe once, twice, thrice you can make money, but without price action, you'll get to know why price action and this VIX is important. Okay, let me take you to the VIX now. Okay, let me take you to the VIX. Okay, this session is going to be like very interesting. So maybe for few it might be boring, but okay, let me take you to the VIX. Right, this is your India VIX. So where is your India VIX standing as on date? Right, this is the level. It stands at 20. Right, 20 is a very tricky number, friend. 20 is a very tricky number. So your VIX can either go up from here. Right, there are only two possibilities. Right, either your VIX will go up from here, or else it can crash. It can come down. Simple. So now the VIX stands here. Forget about so-called strategies and everything, right? You are a option seller. If the VIX tends to go up, if you have your credit strategies like your iron fly, your strangle, straddle, do you think you'll be able to make profit? 0%. When the VIX tends to go, let's say you have deployed a strangle here. Tomorrow if VIX goes up, you will get into panic situation quickly, because what does your credit strategies require? What does your strangle, straddle, iron fly, your iron condor requires? Basically falling VIX, because you are a seller, right? You want the VIX to fall so that whatever premiums you have, whatever premiums you receive, right, the premiums has to become zero, right? As a option seller, the premiums has to decay on the expiry day, but the increasing VIX, do you think the increasing VIX will decrease your premium? It will drastically increase your premium. Then you will get into the panic situation, right? Let's say you have deployed a strangle or a straddle here, and then the VIX keeps falling. Forget about any strategy. You will get into profit. I mean, not directly into profit, but definitely your trade MTM will not show you loss, but definitely that will be in the green, because as a seller, let's say you have sold a strangle, right? Your market stands here. So as and when the VIX falls, your sold positions PE and CE will start, because what is low VIX? Low VIX is low premium. When the VIX is falling, your premiums will also decrease. So that means you will get more theta decay. So then your strangle will give you profit. The reason why I'm discussing about VIX is this is the Bible for any retailer. Okay, so you should know. So now how to identify whether the VIX will go up or VIX will come down? Do we have any parameter? Did someone answer that question? Let me have a look at the chat session. Okay, no one answered. Okay, so guys, are you able to hear me actually? Because there is all of a sudden silence in the chat section. Can someone please confirm whether you guys are able to hear me or not? Or this is here. I'll wait until you guys, until someone says at least yes, and then I'll continue. Okay, thanks. Thanks, Pramod. At least we all are connected. Okay, so this is what I was discussing about the VIX. VIX plays a very critical role in your trades. That's what I've just put the VIX somewhere in the middle. Okay, so now let's see. Okay, now let's take the bank nifty and this contra. I'll come back to you, because if I start talking about the contra, right, then again we will get deviated. So now we will just go to sensible. Okay, I'll take you to sensible. All right, I'll take you to the sensible. Let me take you to the strategy builder. Okay, and then I'll have my bank nifty somewhere here, right? Because we will be deploying everything in the bank nifty, right? If required, if we have certain time, we will cover this thing also. Now, see friends, try to understand. This is my 1 hour. See, 1 hour analysis, right? This is my chart, right? Now, the bank nifty stands here. If you see this red color horizontal line, this is where your bank nifty stands. So let me just plot a line here, right? This is where the bank nifty plots. If someone wants to go for iron fly, do you think this is the ideal position for us to go for iron fly? Just ask that question to yourself. Okay, if someone wants to go for iron fly here, let's say Monday, let's say, always forget that this is Friday, end of the day. Forget about Monday, because basically we have to deploy the trades on Friday. Let's say Friday at 3 o'clock, market stands at here. I've just plotted the line, and if someone wants to go for iron fly, so can they go for the iron fly or not? Perfectly, right? There is a potential chance that you can go for the iron fly, because if you look at this, I'll show you, right? Interesting. From here, right, you have a 2.5% resistance on the upside, and if I take this thing, right, maybe somewhere here, right, maybe, or else even if I take this blue color line, this 2.72 is gray or more, so maybe somewhere here I'll just plot. So you have safety, you have a resistance at 2%, 2.5%, and you have a support at 2.5%. So don't you think you can just go for a iron fly here? What is iron fly basically? See, I'll just plot this. This is your iron fly. Okay, I'll just plot it, right? Let's say this support is here. That's it. So this is your straddle. Okay, let me zoom out this. Right, this is your straddle, and the moment you add the edges here, so this will become your iron fly. I'll show you in sensible also, right? This is, so your market stands now here, right? The moment market goes up, you know there is a strong resistance, even market can again come down. The moment market comes down, you know there is a strong support, market can go up. So this is the way you have to identify whether I can go for a iron fly or not. Okay, this is not complicated at all. What did I say? Let me delete everything. Simple, friends, right? Your Nifty, your bank Nifty stands, okay, let me also delete this thing also. This is way your bank Nifty stands at this position, because check the red line. So bank Nifty can go up also, right? For the next expiry it can go up, or else it can also come down, because it is a make or break. How about deploying a strangle? Sorry, how about deploying a iron fly? Even you can go for straddle also. Even you can go for straddle. If someone is very aggressive, they can go for straddle. If someone is very aggressive, right, if they are like experienced trader, they can go for strangle, naked strangle. Simple, right? See, friend. So this is the way I think basically. Market stands here, so you have a safety of almost like 2%. Based on the premium selections, you'll get more safety. Rather than having safety here, right, I'll have more safety for my strangle. Rather than having a safety here, I'll have more safety on my downside. So I'll go for strangle. I can go for strangle, I can go for straddle, I can go for iron fly, and also I can go for iron counter. What is iron counter? The moment you add the edge here, this will become your iron counter. That's it, right? This is your iron counter. The moment you add the edge for your strangle, this will become your iron counter. Okay. So now let me show you in sensible. Okay. I'll take you to the bank Nifty. Alright. So now bank Nifty 22nd September. Simple. I'll just go for one straddle. Okay. And I'm getting almost 479 plus 480. So let's say 900. I'm getting 900. So I'll buy 900 premium. 1, 2, 3, 4, 5, 6, 7, 8, 9. I'll buy. I'm just going for strangle. Iron fly first, because that's his favorite strategy that everyone will do. But honestly, telling friend, anyone who is going for iron fly post COVID hardly might have made money. Honestly, I'm telling. But someone who went for debit trades, they might have made huge money. This I'll prove you any time on any channel also. People who went for iron fly post COVID, they might have made very less money. But people who went for spreads, debit spread, the directional trades basically, I'll let you know all these things. I'll let you know. So do not see today's Sunday basically. Let's spend another 30 minutes, because this is very important. This is going to be a very important video. Okay. So now I'll make it iron fly 1, 2, 3, 4, 5, 6, 7, 8, 9. That's it. So this is my iron fly basically. So now that's what I'm just comparing it with the. Okay, let me delete all these things. Okay. Now the market stands somewhere here, and I've just deployed an iron fly. Even if the market keeps going up, right? If the market keeps going up, you will do your reverse buying, you will do your sell from the call. That's what you do, right? Because you know there is a strong resistance here, there is a strong support here. If the market keeps falling, you will do the reverse buying. You will wait until this support. You have to select that until this support is breached. You will not do the reverse buying. The moment this, if you feel that there is a strong support and the market can come up, you will do the reverse buying. So I have discussed 18 to 19 adjustments. We are not discussing about iron fly here. We are just discussing about potential trade. If not, the video will become lengthy. Right? You can go for iron fly. I'll just remove these two legs. That's it. I can go for one straddle also, because market is standing here. It can go up, right? It can go up or it can come down. So if it is going up, I'll just do the delta management. I have to see blindly. If you deploy the trade and leave it, no one can make the profit. If market stays in the sideways, you'll get the profit. If market is slowly going up, you will be like rolling up. You will be doing the delta management. That's it. We all option sellers are basically delta neutral strategies. We can call ourselves as delta neutral traders. That's it. End of the day, you do anything, just you play with this blue line and everything. We have to neutralize our delta. No one will talk, no big YouTuber will talk. End of the day, we are neutralizing the delta. That's it. Nothing more than that. You take so-called strategies as an option seller. We have to neutralize the delta. Okay. So I can go for straddle. The other thing is like I'll delete everything. Okay. I'll just go to what do we say this thing, right? Market stands here. I'll go for like maybe actually I'll go for like 20 rupees because, or else let's say I'll go for 56 rupees strangle, right? Even on the call side, do I have 56 somewhere? Okay, let me go for this thing. Even this will work for me. Still I'm getting 2% of profit because I pretty well know based on my chart analysis, market can go up or market can come down or market can also be in sideways between these things. So I'll go for strangle. This is what I'm trying to do. So we have discussed about 4 potential trades. Alright, so now I can go for this triangle. Still you have 2% profit with a safety, with a probability of 92%, with a probability of 92%. Majority of the retailers, what they will do is like they will become very aggressive, and I'll show. See, they will become very aggressive. They go for this type of trades. They'll try to capture more premium, and then their probability of profit will decrease. See, I'll show you. Right, give me a second. Sensible is slow. Okay, but anyways, we are not discussing about any of the strategies, but you got my point, right? So I can go for strangle, I can go for straddle, that's what I've discussed somewhere here. Okay, right? I've discussed the same thing, right? We are discussing only about non-directional trades, right? We have discussed about straddle, iron fly, iron condor, right? Now let me show you the butterfly, how we can go for the butterfly. Okay, now let me delete all these things. So let's say butterfly can be used as a directional as well as a non-directional. We all know. Okay, so let's say looking at the market, let's say you have the view of maybe market will go up. So how you can deploy the butterfly? Let me show you. Okay, where is this thing? Let me delete. Okay, I'll go here. So what did I say? So let's say you have the view of Bank Nifty going up. So what you can do is like maybe you can buy this. Okay. And what is 342 off of this thing would be maybe somewhere, right? I'll sell this to, right? I'm just converting it to directional butterfly. So what is the spread difference? 1, 2, 3, 4, right? I'll go for 1, 2, 3, 4. Let me see. Let me buy this. Okay. So now I'm not sure why sensible has become very slow. Okay. Or else let me go for this one. Okay. Okay, this is my typical butterfly, friends. This is my typical butterfly, right? Market is standing here, but somehow I know that market can be like mild bullish, not super bullish, mild bullish. So this is the way I've just deployed the butterfly. Check the loss. You have only 2,000 loss and you have like 11,000 profit. Check the risk to reward. Almost like 2 is to 1 is to 5. Right? Your loss is only, and we all know how to minimize this loss. We're not discussing about the strategies here. If let's say if you want, so basically this is direction. Sorry friends, we are discussing about the directional trade. I should be discussing this one at this position actually. So when we are discussing about the direction, so let's go for butterfly as a non-direction. Simple. How to do the butterfly as a non-direction? I'll show you. Right? Simple. Let's say you are bullish of the market. Okay, buy this. Alright, and 480, maybe 225, right? So maybe this one I'll sell to. Okay, and then what is the spread difference? 1, 2, 3, 4, 5. So maybe I'll go for 1, 2, 3, 4, 5, 6. Okay, so this will become your butterfly, and somehow, right? Somehow the sensible is getting, so this is even this is wrong, friend, actually. Okay, let's cover this thing as part of the direction. I think that would be easy, and then you can go for calendars also, just in case if your view is non-directional. So you can just go for the calendars. See, I'll tell you one thing, how the calendar looks is simple. Okay, you have to just go for see, calendar is simple, friends. Let's say you are going for 60 rupees sell, and let's say you are going for 60 rupees sell. That's it. So this is your calendar. This is your triangle. So friends, give me 1 minute. Okay, let me log out this sensible. Okay, let me log out and I'll relaunch the sensible again. There is some performance issues, I'm not sure. Strategy builder. I'll show you calendar and then we will move on to my favorite directional trades. Alright, so there is some issue. Okay, so now let me go to strangle. Okay, this is 22nd September, and let me go to Bank Nifty. Okay, I'll go for 60 rupees premium. Just a sample, I'll show you that 60 rupees premium, and maybe this 60 rupees. So this is your typical strangle. So how to convert this to calendar? Simple, right? You have to go to Bank Nifty. Sorry, you have to go to Add, Edit, and then go to 22nd September, right? 29th September. All right. So let me see. What if I sell 60 rupees premium? What will happen? Okay, let me sell this. Sorry, buy. And let me buy somewhere here. Right? This is a sort of your calendar split, because you have a triangle of this week and the edges of the next week. So calendar has many variations. I've just shown you one single variation. You can go for 1:2, you can go for classic calendar, you can go for diagonal calendars. You have all this series in my playlist. You can just go and enjoy. Alright, so now, we have discussed about all these things. So basically on Friday end of the day or on Thursday end of the day, you have to analyze this way. I'm not telling you to trade all these trades. I'm just telling you how to see. We have based on where the Nifty stands, we have the potential of deploying a straddle, strangle, iron fly, iron condor, right, butterfly, calendars, credit spreads, and naked buy and selling. I'll be not telling you, right? If you have the view of market going up, you go and buy the call, right? If you have the market going up, you can sell the put. The other way, you can buy the put and you can sell the call. It's up to you. So now let's come to the directional trade. Okay, so do we have the potential of deploying the directional trade based on where the Bank Nifty stands? Okay, now Bank Nifty stands here. Let's say if someone wants to go for debit trade, right? That would be a very critical call, right? Because Bank Nifty can come down also. The moment you deploy the debit trade, Bank Nifty can go up. If it goes up, right, well fine, you'll be in profit. But what if Bank Nifty comes down, right? First we will go for debit trade. Okay, let me clear this thing. Let's say I'm just going to deploy a debit trade. What will we do? Debit trade usually go by for like 5 strikes, right? Maybe 220, 230 strikes. See, check why we have so much of premium today. Just because, see, usually what do? We buy this one 226 or 242. Ideally that would be like 300 or 400 strikes away from our ATM. But now if you look at the ATM, even today on Monday you are getting 1 second, sorry, this is 22nd, okay, my bad. But still I would say, you are getting 500 premium for your ATM, 480. Usually we do not even get this on Thursday, but can you please guys ask yourself a question like why we are getting such a good premium? Right? And moreover, second thing is like every time I go for like 230 premium, which will be like majority of the time like from the ATM, it will be like 200 to 300 strikes away. But if you look today, the 230 is almost like, see, ATM, right? 1, 2, 3, 4, 5, 6. This is just because of this reason I'll tell you, because of the VIX. That's where I keep telling you, do not ignore the India VIX. Because your VIX is standing at 20, IVIX is I premium. Simple friends, IVIX is I premium. That's the reason you are seeing such a good premium on Monday. Usually we do not even get this premium on Thursday also, but today we are giving. Okay? So let's say I'm just going for a debit trade. Okay, so what I'll do, I'll just, rather than going for 229, I'll just go for 263. I'm buying this. What is half of 263? Right, I'm very bad at half of 130, 138. So maybe let's say I'm just selling this. Okay, 1, 2, 3, 4, 5. Okay, let me sell this. So this is your typical debit trade. Okay, based on the Bank Nifty. Let me again take you back to Bank Nifty. This is going to be like a very interesting video frame. Do not think that what is telling, right? Try to understand the context, right? Your market stance. Let me take you to 15 minutes, okay? That will give you more clarity. Or else let me take you to the 5 minutes. This will give you more clarity, okay? This is the way I do the analysis. Okay, so now, see, check, right? I am just showing you in 5 minutes. So let's say this is where your market stands. Right? Usually what I do is like whenever I go for debit trade, so let's say I will mark this support. So maybe I have a very strong support somewhere here, right? See, there is a rejection here, almost there is a rejection here, or else I'll just let me take it to this way, right? This is. So when I deploy the debit spread here, if the market goes up, definitely I'll get into profit. But what if the market comes down? So this is my benchmark. The moment the debit spread, the moment the bank nifty comes down, if it breaks this support, then I'll change my view. I'll try to mitigate the loss by changing it to strangle or ratio spread. You call this so-called adjustments, or else I'll exit from the trade. And not exit, basically, I'll start doing my adjustments, because I know that there is a strong support. If the bank nifty goes up, and debit spread will give me profit. But worst case, if it comes down and if it breaks this, so then I'll get into my adjustments. So now, see, check. That's what I've done. So maybe you can go for the debit spread, or else if you are like very concerned, what you can do is like you can just go to add edit. You can just convert it to a ratio spread. So what is 124? Half of 124 would be somewhere like 60. That's it. Right? This is your ratio spread with a loss of only 2000 on the downside, and on the upside you have potential of 8% profit. This is called ratio spread. Either you can go for debit spread, but honestly I'm telling, I'll not go for debit spread here. Honestly I'm telling, I'll not go for debit spread. Again, let me get you to 1 hour. Because for this simple reason being, I'll not go for the debit spread. Okay, let me delete it. Right? That's where, if you look at my trades, I've deployed the ratio spread. Because market is at a make or break. Simple friends, this is the way you have to analyze. Market is at make or break. So why should I deploy the debit spread here? Right, when the market comes down. So that's the reason what I've done is like I've deployed the ratio spread. This is the ratio spread. If the market keeps going down, I'll make this 1900 loss zero with only one adjustment. And you know what is that adjustment? Simple, by rolling down this call, like 1 times, 2 times this call, 1 time, 2 time, I'll be making a loss. Even if someone wants to make this loss zero on the day of deployment, what they can do? Rather than getting this one, I'll delete. So I'll show you like different permutations. It all depends, right? This is your sold position. I'll just go to 34 and I'll try to get, let me see 2, or else I'll go for this 2. Okay, let me deselect this thing. I'll go for 2 quantity. Okay, let me 1 second. Okay, or else I'll make this 3 quantity. Okay, this is, see, you can go for 1:1:3 also. Still, you have the potential of getting 4% profit. But ideally, what I do is like, I do not see intentionally, I give the loss basically. You know, in my all my ratio spreads, I'll go for this thing only. I'll go for 1:1:1. Intentionally, I give this 1000, 2000 loss because to get more safety on the call side 5, because the threat of ratio spread is gap up. You are safe till here. See, even tomorrow, Monday, when the maybe next day the market opens like 3.54%, your loss will be only 580. You're able to get that loss just because you're giving more range on the upper side by just giving some what? By having some loss here. The moment you add some loss here, right? So then you will get more safety. So if I become like more, see, let me show you, right? I'll try to see. I'll try to go inside. Though my loss is less now, 1245, but my range will decrease. See, even if I go like one strike 100 points inside, see, my loss has reduced to 750, but my range has also reduced. But that is my threat of my ratio spread. For that reason, I keep my loss intentionally 2000 years. So we are deviating from the topic. We are discussing about the strategy. This is all about how to deploy. So now, looking at the bank nifty, I'll not go for debit spreads. You got my point? I'll just go for ratio spread from my directional strategy. In case if I want to go for directional, I will not go for debit spread. Alright, I'll go for ratio spread. If required, I can go for directional butterfly. I've discussed with you recently how to go for the directional butterfly. Let's say you are bullish about the market. Simple friends, the market stands here, right? The market stands here. Just go like 300 points. That's what we have done, right? Initially, right? 300 points, and let's say you sell these 2 positions. Right? This is your butterfly, like 2 sold positions, 1, 2, 3. You buy this, not this one. Okay, let me show you. Sorry, right? This is your butterfly. Simple, right? Market stands here. You know that market can go be like sideways to bullish. So if you're able to trap the market somewhere here, you'll get with your 6,000 profit, and loss is only 739. But again, if you think that if I'm like bullish about the market, then why do I need this red area? So then you have to just manipulate. See, the moment you go 100 strikes below, this is how your trade will become. Okay, so upside you do not have any loss. You have locked your profit on the upside. So just in case if the market keeps going down, you know how to reduce this loss. You have to just get in with your all so-called adjustments. Okay, so we have discussed about debit spread, ratio spread, butterfly, jade lizard. Jade lizard is simple, friend. Jade lizard is simple. See, let me take the ready-made, right? This is also a sort of direction, right? Strangle is a non-directional, right? If you think that market can go up, if you have a feeling that market can go up, so what you can do is like you can just add one. What do we say? Buy. Okay, let me add both the buy wings. Okay, let me add this buy wing, and also for the demonstration purpose, let me add this buy wing, right? So this is your typical iron condor, right? So if you delete this thing, so this will become your jade lizard. Okay, so you are basically, let me get it down. Okay, give me a second. Sorry, not this one, my bad. Okay, so you have to just play with the right. If you have the market view of saying that sideways to bullish, so you can deploy the jade lizard. This is a sort of directional trade. And let's say if you are like just add the wing on this side, and let me do the adjustments. That's it, right? You are sideways, right? Neutral. It will give you like almost like 5%, and in case if the market falls, you have zero loss on your put side. So this is the way. Right, we have discussed about your debit spread, ratio spread, directional, right? Jade lizards, you can go for your credit spreads, you can just deploy the calendar spreads, you can just go for the back ratio spreads. I mean, see, all these strategies are here in the ready-made strategies. This is your back ratio spread, put back ratio spread, and this is your call back ratio spread. So this is what I wanted to have this session today. Basically, I wanted to tell you, right, based on the chart, and based on the chart you have to decide like which trade you have to deploy. So looking at the chart, I think this typically looks a very good potential match for your iron fly, for your strangle, for your straddle, for your iron condor. On the non-direction, from the directional perspective, the only two trades what looks very good is like your ratio spread, because market can make or break, or else your directional butterfly if you are bullish. If you want to make it bearish butterfly, right, we all know, right? If you think that market can come down, so what you have to do, simple, you can make butterflies. Let's say you buy this, okay, maybe you can sell this to quantity, and then you can buy this, that's it, or else you can just buy this. Okay, this is your bearish butterfly, right? Sideways to bearish. Okay, so if you want to make this profit also green, so you have to just play around with your buy position. But this is your butterfly with a directional intention. Got it? Okay, so this is what I wanted to explain. And do not ignore the VIX. VIX plays a very important role. Let me tell you one thing, right? If the VIX, let me show you VIX, and now you have to answer this question, right? This is very important, friend. This is very important, right? When the VIX stands at 20, so can we go and deploy the calendar? When the VIX stands at 20, see, when the VIX stands at 20, so can we just go and deploy the calendar? No, this is a very tricky position, right? From here, market stands here, the VIX stands here, right? So if the VIX goes up, your calendar will give you profit. But this is a tricky, right? 20 is huge already. So what if the VIX falls? Your calendar will give you loss. So I'll not go for calendar. Point number one. The second thing is like, can I go for iron fly here? Can I go for iron fly? Ideally, not even go for iron fly, because chances of I can go for iron fly because VIX is already 20, so maybe 70% of the the probability is like VIX can come down, so then my iron fly will start giving me profit. But there is an equal chance saying that even VIX can go up also, because in the past, if you look at this is, see, VIX already made a move of to 22, so this is at a very tricky place. Okay, so can I go for one second, friend, right? When the VIX stands here, can I go for debit spread? Can I go for debit spread here when the VIX stands at 20? Debit spread doesn't have anything to do with your VIX. Believe me, friends, all your debit spreads, because the name itself says debit spread doesn't have much trade impact with the VIX. if you want, say not show you, go ahead and deploy one debit spread and try to move the VIX up and down. You see, yes, VIX will support you, but that will not drastically give you loss. So debit spread can be deployed 365 days a year, because that doesn't have anything. Only your credit strategies will have direct impact with your VIX, because rising VIX is not good for your credit strategies. Falling VIX is good for your credit strategies. So now VIX is at a very critical position 20. It can either go up or it can either come down. So you have to be like very safe while playing any strategies. So rather than going for credit strategies, I would say go for ratio spreads, go for butterfly. Even butterfly doesn't have any impact with your your VIX, because end of the day butterfly is like it's almost equivalent to a debit spread, because we end up giving like very less debit, but it also comes under the debit spread. Sorry, debit strategies. So this is fair. So whenever the VIX stands at 20, you have to be like double sure when you are deploying any of the trade. You have to be double sure. How to identify whether the VIX will go up or down is purely based on your price action on your bank nifty. Okay, now why did we haven't discussed anything about nifty, right? Because do not even go for debit spreads or ratio spreads in nifty because of the strike gaps you have. Because I've tried deploying the debit spreads and also the ratio spreads in nifty, that is not that much of compatible for the debit spreads, because of the reason is this one. See, you have, if you look at the if you look at the strikes, right, we have 100 strikes difference, right? We will be getting like worst to worst case, if I want to deploy debit spread, see, let me show you one debit spread. Like if I want to deploy debit spread, I can easily go, I can buy this, I can go 500 spreads, right? I can sell this. I have almost like 500 spread difference. Slowly I can do roll up 100 points. But let me show you nifty. Why the reason I do not go for debit spread in nifty. So let's say you went like buy this, and what is half of 120? I did a 60, right? Maybe this one, right? So you hardly have 50, you hardly have 3 strike difference, 657, 800. Right? So you are very limited, so you cannot do more of roll up. But wherein in bank nifty you have 500, at times you'll get 600 strike difference, wherein you can do the rolling up, but in nifty you cannot do. And if you go for ratio spread, you'll not get that option. That's the reason we are not discussing about this one, your nifty. But nifty is one of the very good instrument for your strangles and for your straddles, believe me friends, and also for your jade lizard. Right, because this is low volatile when compared to bank nifty. Yes, we all know even nifty has started following the bank nifty now. See, needless to say, right, see 2% downside movement on Friday, and bank nifty has given just 1%. Even this has become very volatile. Right, if nifty also becomes very volatile, right, so then people will trade in both nifty and also bank nifty. Your so-called debit spread, your so-called ratio spreads, also people will start deploying, because right, when even this becomes very volatile, what you'll get high premium. So high premium is like you'll get high spreads basically. Okay, and there is one last slide before I go to the Q&A. This is boss. Right, see, I do not have any wrong intention of mapping the gods, just for the fun purpose I'm just telling. See, your market has all this so-called list of gods, right? You have to select your own god. So you have something called God in the form of iron condor, debit spread, calendar, iron fly, ratio spread. This many gods we have. So you have to select. See, there is a saying in market, right? If someone just trades iron condor, he can make money 365 days. No, that is wrong. Because what did they say? There is something called VIX. Based on the VIX, right, you will be able to. So iron condor might work only for 2 to 3 months based on the VIX. Your iron fly will work only when the VIX stands at where 10 to 14 or 14 to 16. If your VIX stands at above 25, your iron fly, what I mean to say here, at 18 or 19, your iron fly will not. Whenever the VIX stands at, let's say, 25 already, your calendars will not work, because there is a tendency of VIX coming down, so your calendar will come into loss, right? So what is the takeaway from this slide is like, basically you have to master one directional and you have to master one direction. That's what I said. This is my secret friend. Hybrid traders' favorite god is like, irrespective of how many trades I have, right, I can just divide all these trades into 2 things. One is directional, another is non-directional. So based on the VIX, either I'll select directional or non-directional based on the wicks, based on the open interest, based on your chart analysis, and there is a something called unknown god, that is like wicks based strategies. My trades are basically either it can be one directional trade or it can be like a non-directional, or else I'll go for directional by having a contra non-directional trade, or else I'll go for non-directional trade and then I'll manage this non-directional trade with a contra with the directional trade. I mean, that's what I meant to say here also, right? For me, I am not a great fan of all these strategies. So whatever strategy can yield me like more profit during that particular week, I'll go for that strategy. See, though I say debit spread is one of my favorite strategy, but have you seen, did I deploy the debit spread? No. Let me show you my trades also, right? So that you, let me show you my trades also. Okay. See, this is where I went for my, this is, see, let me show you. This is my, what do we say? Let me show you. This is my ratio spread. See, when I say I do it, I did not deploy the debit spread because I know Bank Nifty. So why should I waste my hard-earned money? Okay, let me take you again. Let me take you. Bank Nifty is standing this. It can go up or it can come down. So why should I put my hard-earned money onto the paper? So rather what I did is like I went for ratio spread. If market goes up from here, see, let me show you, right? This is what, if market goes up for me, definitely I'll get into the profit. If market comes down, you know, right? This is my favorite strategy. If market comes down, I can make this zero. I can also make this 1% or 2% profit. I made a video yesterday, the contra trade. What did I say? There is something called Holy Grail. This is my Holy Grail trade. My only threat for my this trade is market should not open 3.4% gap up. Looking at the probability, which is less on a paper, right? Market should not open gap up, right? I'll manage. If it gaps up, I'll accept the loss. But probability is only 5 to 6%. I'll go by probability. 95% of the site, my trade will support me. Yeah. Tomorrow, if there is a huge gap up of 3.5%, right? I'll accept my loss. That's it. I'll accept my loss. So next time again I'll go for ratio spread because already I have the gap up of 5%. You think again for 3%? You think again market will go up? So now I'll try to recover my loss by again going for one more ratio spread, and I know market can stay where it is or else it can come down. If it stays where it is or if it comes down, I'll just get into the profit. So sorry, we're discussing about this strategy. This is where I've deployed. Let me show you my other trades also. Okay, do I have something here? Yeah, USD INR. Why did I go for USD INR for my ratio spread? Right, and I keep on telling, right, do not go for the ratio spread on the call side, on the put side. But you know, the reason why I went to USD INR on the ratio spread on the put side is like, even there is a data point. Whenever the USD INR goes up, the moment of the upsides are very volatile when compared to moment of the downside. So by this time, you might have got to know why I've deployed 1:1 on the put side. Okay, because when USD INR falls, it falls very low, but when it goes up, it makes a volatile. See, I wrong to say volatile movement, but USD INR makes a green candle, bigger green candle than the red candle. So that's the reason I have deployed a ratio spread USD INR. It is giving me 300. So tomorrow 9 o'clock profit. Let's say if this comes here, if I'm able to see, I'll be able to make 10% profit, friend. If I'm able to trap the market somewhere here. If the market keeps going up, what did I say? I can make this loss 900 to 0, or else I can make this loss to 1% and 2% by rolling up my second sell position. This second sell position, this one to slowly to 100 points, right? Slowly 100, not 100, sorry, gradually increase so that this side will become green. If you want to show, I mean, I see I've shown you 100 of times. Okay, so let me show you one more trade, right? My Bank Nifty. Okay, Bank Nifty. Okay, let me show you. Let me take you to the virtual trade. See, whatever I say, I do that. See, this is my ratio spread, right? Whatever I tell you, I trade the same thing. That's it. I'm not trading. Even this thing, simple. There is a CE ratio spread in the Bank Nifty. This is a contra trade, one of the contra trade what we have discussed, but simple. If the Bank Nifty falls, I'll make this 0 on any given day. If the Bank Nifty goes slowly up, I'll just roll up one day, or maybe like within 2 days, I'll make this green. And then if market goes somewhere here, I'll be able to get my 7% profit. Do I have the list? I mean, viewers still? Okay. Glad to see 37 people are there. I thought maybe by this time, right, all 35 people will be like disappearing. So friends, let me take a quick 10 seconds pause. Okay, so what did I say? I've just taken 1 hour time frame, 1 hour time. So let's conclude this session. If you have any Q&A, if you have any question and answers, right? I mean, the one thing what I'm not seeing from you guys is like, can you guys please give it a like, because can you guys please at least give it a like before I show you one more screen. The other thing is like any comments you have, right? So please go and comment. See, until unless you guys comment in my YouTube, so how will I get to know whether you have some Q&A sessions or not? Okay, too much of echo, voice is not clear. Okay, how is the voice now, friend? Okay, anyways, it was all through the video, it was echo, or only the last part? Sorry friends, I've not noticed the chat section, so sorry, I'm not sure whether you guys were able to, right? Just now it was like there was an echo, but was it manageable or it was completely not understandable? Yeah, anyways, no worries. We can have one more session also, because I'll be making these videos again and again. So every Friday, right? Maybe for the next 2 to 3 weekends, we'll get the same activity done, and then we can just give a full stop for the session. Maybe by that time, you guys will be very much confident about what strategies you have to deploy. Okay, sorry, my bad. I've not seen the Q&A sessions, because you know, right? Whenever I get into some content, right, I get so deeply involved, right? I mean, because I love teaching actually. So when I say love teaching, only the trading concepts, not the other concepts. Okay, friends, I think it's already 1 hour. My bad. I've not seen all those reviews. I mean, the comments, right? Sorry for that. We will have one more session on the next Sunday or Saturday. Basically, we will be discussing based on the market structure. We will again discuss like what potential trades we can deploy. Okay, the same thing, we will have 1 or 2 more weekends, like at max 3 weekends, and we'll see what all strategies we can deploy based on the market condition. Okay, and one final thing wherein I wanted to end this session is like, friends, this is my Telegram channel. So you know, right, there was a great response from majority of my viewers, wherein they went for like 1 year subscription, 2 year subscription. I got my payout last yesterday. So friends, I'll be sending you all the emails. So please share your email ID and the order number, so that I can start sending you all the marketing. What do we say? Marketing commission. What I got, I promised you, right? So I'll be like, whatever commission I get, I'll just refund everything to you. On top of 500 discount you're getting already, and then you're getting 4 months of extra for 1 year, and whatever marketing commission I'll be getting, I'll be just returning to you. So I'll just run this offer for another like 3 to 4 days, and then I'll stop it, friend. Okay, so I got huge response, so I'll start sending all those refunds in a day or two. But before that, I need your email ID, or else I'll just try to see whether if I'm able to correlate your order number with your email ID. So what I need is your GPay number, Google Pay number, so that I can just transfer from my Google Pay account. Yeah, someone asked about the Contra trade site. See friends, I'll tell you what is Contra trade. See, this is, let me see, again that will extend. So you all guys are okay for the Contra trades, or shall we give it a call? I'll go by the majority. If you say, let's show one example of the Contra trade, I'll show you. If not, we will conclude. At least what I need is like 10 minutes. What I need is 10 minutes for the Contra trades. If majority of the people say yes, I will show you the Contra trade also for the next week expiry only. My bad, sorry, I did not notice the echo issue. Okay, next time I'll ensure that I'm having an eye on all the comment section also. Sandil says yes, at least if I get like 10, right? Okay. See, do you want me to again show in Sensible? I think that would not work, because, okay, see, basically what I can show you is on the this thing, right? Let me show you, right? Let me take you to the chart. Right? There is a very good contract trade. Basically, what you can do is like, see, Simple, how should I tell? If you want me to show you sensible, that would not work actually. So I'll try to explain you the logic. Okay, I'll try to explain you the logic. All right, so we all know Bank Nifty can make or can break. All right, so now see, it's very simple, friends. So basically it's very simple strategy. So now what we will do is like we will go for the contract trade, but we will not go for two debit spreads. Okay, let me try to show in sensible only. Okay, I'll go to strategy builder. Let me close all these things. Let me show you. I'll go to strategy builder. Last 10 minutes, we'll find it off. I'll go to Bank Nifty, and also I'll show you like two this thing. Okay, let me show you. First I'll show you Bank Nifty only. So now I'll go for the ratio spread. So for me to go for the ratio spread, let's say 1, 2, 3. Okay, I will buy this one. What is half of 342? So 150, 179, maybe this one, and then 170 half would be. Let me go for this one. All right. Okay. So this is my ratio spread. Okay. If I want to make it lossless, what I can do is like I can make it 2. Okay. Let me see. Okay. This looks perfect, right? So this is one of your ratio spread in Bank Nifty. Okay. So then what I'll do in the same Bank Nifty, I'll go for put debit spread. Okay, let me show you like quickly. Let me show you. See, I'm randomly selecting few strikes. Right? Let me show you. I'll go for 350. Buy what is half of 350, 150, and maybe 173. Okay, let me see this one. Okay, see friends, try to understand. This is my ratio spread in Bank Nifty. The same put debit spread in Bank Nifty. I'm not even talking about the twin brother strategy. Okay. So what will happen if the Bank Nifty goes up? So you have the potential of getting 4.8%. Yeah, definitely your capital has increased. So you are getting 12,000 profit, right? Your loss is 0. Your loss is, if Bank Nifty goes down, your loss is 0. If Bank Nifty slowly makes a move of like we have a safety of almost like 3.62%, you will have the potential of making 12,000 profit. And if Bank Nifty goes up like slowly, so you have the potential of losing only 5,000. So net you got 13,000 profit and 5,000 loss. So net you are in a very good profit if the Bank Nifty slowly goes up. We will discuss about the gap up and everything later, right? Now, what did I say? When the Bank Nifty is going very slowly, you're able to trap. So you have the potential of getting this profit and your loss is only 5,000. But net this 12,000 minus 5,000, you will be like in 7,000 to 8,000 profit. Let's say Bank Nifty has fallen like maybe 2.4%. Let's say here, you will get 12,575 profit if Bank Nifty starting from year till year, you will have the minimum profit. Okay, from year till year, you will have the maximum profit. So let's say Bank Nifty has gave it down moment. If you're able to trap the market, you will get your entire 12,000 profit, which is like 42% on the capital deployed, and your ratio spread. Anyways, even if the Bank Nifty falls, your ratio spread will be in 0. As and when the Bank Nifty keeps falling, what you have to do? You have to increase the profit here. I've made a video yesterday. That's what I'm telling. We have discussed about Holy Grail trade. So you have to either exit this trade or else you have to keep adding your many sell positions by using the margin reduce, right? We have discussed about these two strategies. Yeah, the only threat is like, what if Bank Nifty opens tomorrow gap up by 3%, right? Which is rare. So that's what I'm telling. This is go by probability. This is there on the paper, but 3% gap up, you go and search. That's what I'm telling. If someone within my viewers side who's very good at giving me the data of in the last 5 years or 10 years, how many times the Bank Nifty has given a 3% gap up move, I want to get that data. Even I'm trying to do that. So 3%, so then you will be in loss for sure, because you will lose your 6,000 here, and also you might end up losing your 4,000 here. Got it? But again, this is an extreme case. So 95% of the time, Bank Nifty will not give you 3%. That's fair. Your price action will come into picture. your price action. You should know the momentum of the market, but otherwise if the market stays where it is, right, you will get profit here. You have to do the adjustments here. If the market falls from year till year, you'll have the minimum profit. From year till year, you'll have the maximum profit. You have to slowly increase the profit here. That's what this, see, though you have these two trades, but basically you have to manage these two trades independently. If you become master in managing debit spread and ratio spread, believe me friend, you don't even need any other trades. You have to become expert in managing your ratio spreads and your this thing. So this is one of the contra trade in bank nifty itself. So now let me show you in nifty. Okay, let me show you nifty, right? So maybe I went ratio spread in bank nifty, so I'll go for debit spread in nifty. What is it? Put debit spread. Let me see how it goes. Maybe I'll go for buy. Half of under would be somewhere like close to 50, 42. Let me see what is the risk reward, right? This is it, friend. Same. This is also your ratio spread will give you 12,000 profit, but this will give you only 3,000. If you want to reduce this loss, you have to play with the with your strike. That's what I keep telling. Strike selection, premium selection. I'll just leave it to you based on your risk to reward, risk appetite trading style, you have to select. So this is a sort of contra trade. If the nifty goes slowly up, you will have the potential of getting 12,000 profit, and slowly bank nifty, right, you have the potential. And even if the inline to that nifty also slowly goes, what you have to do, simple, see again, one thing what I show is like, let's say nifty stands here. See, there are like multiple permutations and combinations. Let's say nifty stands, I'm just trying to take 2%, right? Let's nifty stands here, and this is, let's say you're close to expiry, so you will get a profit of, let's say 12,000. You're getting a profit of 12,000 on the expiry day, but you will be getting a loss of 393, or maybe tomorrow or day after tomorrow. You have to manage it. But let's take an example of expiry, or let's take an example of not expiry day. Let's take an example of, let's say on Tuesday or Wednesday, your trade is giving you a profit of 1,300 profit or 400 profit, right? What you have to do is you have to convert this into a ratio spread. So you have to just convert this loss to zero. How can you do? There are like multiple ways, right? You can just add, you can just sell one thing, right? You can just sell one call. What am I doing? Right, sell only, right? When you put, see, this is where I get confused actually. So maybe what will happen if I sell, okay, not this thing, I'll go for like 23, okay, and if I go for two quantities, see, there are like so many adjustments I can see. If you go for like, you were able to make your loss 700 rupees. If you go for like aggressively, right, that's it, you're able to make your loss to 295. Let me show you, right, that's it, right? Whenever the nifty is going upper side, right, so you have to slowly start converting your debit spread to ratio spread. You can convert your debit spread to strangle, you can convert your debit spread to ladder. There are like so many adjustments. That's what I keep telling, right? If you are blindly just deploying this contra trade, one ratio spread and one debit spread, and if you are just leaving it, no one, market will not respect you. You have to be like very good at doing all those adjustments. That's what I do. I basically manage these two trades as two different trades. Honestly, then I'll get with good profit. I'll manage this as a pure ratio spread. This doesn't have anything to do with my debit spread, but I'll manage this as a pure debit spread. This doesn't have anything to do with my ratio spread, but overnight this will act as a contra trade. When I'm in meetings, I'm just a passive trader, I'm not a full-time trader, but during offline, when I'm in meeting, this will act as a contra trade. Okay, so I think friends, we should give it a call. So already it's been like 1 hour 15 minutes. So no worries, we can make many more videos every Sunday. Another for 2 to 3 weekends, we will make this video every Sunday, right? With the same content, what potential trades we have for the next week, and then I think by that time you guys should be like familiar with what trades we need to deploy, right? Watch this video 1 or 2 times. Do not ignore the wicks. Do not ignore this wicks. Again, I'm telling friends. See, basically, I'm just creating this slide for you. You can take a screenshot. Right? These are all the directional trades. These are all the non-directional trades. I cannot show you all this. Do not ignore the wicks. And this is called your contra, auto-adjusted, or your signature strategies. Simple. Okay. And direction. My direction is like chart 80% to 90%, 10 to 20% I take confirmation from OI and FIs. I do not predict the market. SGX, Nifty, I'll just use it for gap up and gap down, and that's it. Potential option strategies for 22nd September expiry, I'm done. Okay, so friends, can we just conclude the session? So if someone has not liked my video, please like the video. If you have any open questions, you can always ask in the comment section. Alright, so let me just have a look at the comment section and then we'll just close the session. Okay, thank you friends, good night. Hope you all enjoyed the video. This is not at all a paid video, so at max you might have wasted 1 hour of your precious time. That's it, I can say. Hope this is not a paid video, just in case if you have paid something and then if you're not satisfied, so that would definitely have a bad reaction on you. This is end of the day, it's a free video. End of the day, you might have wasted only 1 hour in case if you did not like the video. If you got some good context on the video, please like my video, comment my video. Friends, until unless you comment my video, I mean, how will the other viewers get to know, right? It was a good video, it was a bad video, but if you are giving the bad comments, give it with the data points. Let's say the audio was very bad. Yes, that's mistake of mine. Let's say you have to just give the data points so that the other viewers should know the logic rather than giving only single line. Alright, so thank you friends, thank you for watching my video. Thank you for staying till like almost like 8:16. Okay, thank you.